Okay, mic's on. Let's go, you guys. My video. Okay. Oh, I keep forgetting to do this. You know what? Let's do this one here. Okay, there we go. I think I might change it later if it's wrong. Okay. Hey, what's up, Manuel? What's up? Okay, give me 1 second. Alright, so what's going on for today? It's gonna be a long show, you guys. I have quite a bit of time. So, free weekend. So I am going to talk about a whole bunch of stuff. Just babbling, not much. Let's see. I'm gonna wait a few more minutes. I will be right back. Okay, let me play some music.
How do I start a savings habit?
How to start shaving a rabbit.
If you want a simpler way to build a habit, a BMO savings.
The start of the funny.
All right. I hope people enjoy that. I love that song, the first one. The best. The best song ever made in the entire world. Okay. So, all right, there's a lot of people over here talking about GameStop. I get it. It's a max hype time. But let's bring everybody down to earth a little bit here because it's needed. After the trading session of Friday, it's to be expected. I know. I was doing this trend line for forever until the, ever since it was traded up here, kind of expected that it might come down over here. Although I was a lot more bullish over here because I thought it was going to, go through the price discovering, Wyckoff theory. Perhaps this is also another Wyckoff theory that, what is it? The SOS level is over here instead of over here. Or it's just another pattern altogether. Who knows, right? But anyway, so welcome everyone. I don't know how many people are joining right now, but welcome to the show. Like I said, it's going to be a long show because I do have a lot of time today. And we're going to go through a whole bunch of stuff. It might be useless for most of you, but I hope it's hopeful. It's helpful for somebody to listen to. Sorry, I have my coffee over here to sustain me until however long it's going to be. So let's go through the price real quick. Of course, it's it's very canning to me that the price seemingly to only close below the max pain. I think max pain was 27, and no matter what, it seems like it's adjusted to the max pain level. Let me show you over here. And of course, again, right, market maker has the ability to do this, and anyone who understand anything about max pain would realize that as well, right? That's not to say it's always going to be like that, but the majority of the time, the price seems to gravitate towards max pain. And again, this is because people are betting up and down and calibrating, and of course, market makers also the people that are standing to gain the most when it closed around the max pain, right? It's like, I guess you could say it's an equilibrium up on the bets on both sides, right? And of course, this is skewed towards the call option owner. So call option owners usually stacked against them, okay? Now, there's only a rare moment in time in which call options going to stand to benefit the most. So it's almost like they're enticing you. The way that they price the option, the call option or put option, is to entice people to buy more puts than calls, because calls usually are more expensive than put in some instances or another. And of course, they do this to protect themselves, obviously, right? And the unsuspected retail investor out there who doesn't understand that will lose out quite a bit. Now, I mean, my calls is also right now it's down 20%. I still have my call on April, and I understand that. The risk is a lot higher, and that's why I advocate people to hold shares more than calls, because yes, you might be able to make a gazillions of dollars, but then most of the time, close to 99% of the time, you would lose the entire thing. And again, this is why it's touted that when you do that, it's mostly just gambling. You just bet on the roulette table, and then 50-50 chance of getting it right. And on top of that, it's the houses always win. The house will always win. So whoever sold those calls to you, it could be retail. Sorry about that. It could also be market maker, right? And so just be careful. And I mean, the only way that you could win this game is to buy and hold in the company. And only if you believe in the longevity of this company, you would buy it and hold it and do nothing for it for 10 years. There you go. And manual. Volume is low. People appear to report to overpay in the 30s because they believe a cat is going to save them. True. Yeah, I am going to buy a few shares if the price goes down to the low 20. Low 20, I disagree with that, but yeah, I mean, you could wait for that one. I don't think they're gonna be so, excuse my language when I say it's so dumb to bring it down to 20 again, because again, there's a lot of buyers in that 20 zone. Low 20, I don't know if it's gonna go down to that, but I would start my position over here if I or at least start the position, right? Again, if you're long-term shareholders and all that stuff, believing in the company for the long haul, believe in the leadership that they could turn around and of course deliver on the the next earning report, because again, next earning report it's going to blow out of the water, in my opinion. Of course, like I've been saying that, and I only focus on the earnings per share here. I'm not focusing on this top line revenue. So, depends on which metric you're using to measure, the longevity. But I do agree that it might come down a little bit, but not to the low 20. And the volume is so low. Like, again, this is why I feel like, let's look at the OBV real quick. Let's see. And again, these type of indicator might not really tell you anything, but it's just the volume being traded here. You see the drop from here to here is not that steep. If people are really selling, the majority of people are really selling, you would see the volume a little bit lower than here, even coming down here, right? Because from here to here, I don't know, again, maybe I'm just reading this wrong on the OBV part. And it might not even tell me anything. But you see the downtrend for the OBV, it's not as steep as the price. So when that happened, it's just like a reversal might ensue. If you could see a peak of OBV up here, while the price coming down, diversion maybe. Let's see. But yeah, I mean, it could also break down as well. So if you see a peak down where the volume comes in, sell volume more than buy volume, you might see a lot more steep price dropped. But can they bring it down to 20s? I don't know. Investors are irrational. Some investor won't sell at 60s, that's me, but will sell around 20 if it's the price getting closer to their cost average. Okay, I mean, I respect that sentiment. If they, again, that's for investor who doesn't know, or at least for the investor that need to sell because they don't have any other means to support their cost of living, right? And so that, I'm sure some of that investor exists in the world as well. If you need to sell, no matter what, you have to sell, right, to support your life. And of course, with the market crash that is looming right now because of the tariff situation, people might just panic sell anyway. And so that assessment might be correct. I respect that. But, for the people that really know what this company is doing for the future, they would so happily to buy it at 20. For sure. Am I going to sell at this price? I mean, I don't think so, just to get it at 20 again. That's the risk that I don't want to take, because I might not be able to get it at 20, right? Or it might not even get it to 20. Meanwhile, I already sold my position over here, And so again, that's the risk that anyone would want to take, right? Or could take if they wanted to. And so, because again, it's easy to sell, it's easy to buy, but most of the time when you're trying to predict the downfall of something, you run the risk of buying it at a higher price than you originally bought it at or sold it at, to try to get that. But yeah, people misprice things all the time, or overprice things all the time. And that discrepancy is what Wall Street is, tend to benefit from that. The irrational nature and emotional nature of traders out there. And again, I've understand the psychology of price action and all that stuff to try to shake people out. These drop mean something to people, because when they used to see thousands of dollars over here and now it's gone, it just like demoralize you, because you're like, oh, I should have sold this price. I should have sold this price. I mean, I've done it myself too. It's like, oh my God, now will it ever go back up there? Right? And so when you see the price drop down to the low 20, people panic. I'm sure most people panic over here and sold a whole bunch. But only people who buy fear. Remember when Warren Buffett says, and it's really true through the test of time, buy when there's blood on the street. I don't think it's Warren Buffett. It's actually somebody else. Buy when it's on this. Buy when there's blood on the street. Even if it's your own blood, buy it, because then when market corrects itself, you're gonna stand to benefit so much. A lot of fear is happening, and so I wouldn't be surprised. I mean, sure, it could go down to the low 20, but what do you think is gonna happen though? It's gonna cascade down to 18. And even then, like, the recovery would be massive. But can they risk that though? Like, if retail are owning this thing and they're not shaking out, like, I don't think anyone was shaking out over here, right? As evidenced by the OBV over here. If anything, OBV was flat. See? So when the price goes up, people just continue to buy. There's a lot of people sold over here. Don't get me wrong. See, this is what you should be seeing when people are actually selling. Okay, could see that right there. So yeah, buy the dip for sure. I look at it. Like, this is the support of a lifetime. if you don't buy this support right here, you'll be, I don't know, I hate to call people's name over here, but you'd be stupid not to buy it. Like, at some point, you're like, okay, this is like more than 50% equity in the company, future earnings. Why wouldn't you, right? Again, only if you believe in Ryan Cohen and how he's able to deliver, how he's go about to make this company better increase in top line revenue, right? Oh, it's coming. Don't worry about it. Like, do you think that the downtrend on the top line revenue is going to go on forever until the end of time? No, it's not going to go up. It's not going to go down forever until the end of time. Okay. And that's the recency bias that most new investor, most day traders out there, they're two different animals over here, so I can't combine them. But especially newcomer to the stock market who doesn't know how to evaluate the company, right? And again, I'm not saying that I know how to evaluate the company, but I just feel like, at some point you just have to do the math for yourself and not to trust too many of those analysts out there that are telling you, because again, they keep telling you that GME is going to go bankrupt. That narrative has died now, I hope, right? And so I hope that they could find a different way to scare people out of this company again. But at that time, at that point, I feel like people are going to be like, okay, what else are you going to say that is negative about this company? You could kind of scare people based on the fact that Brian Cohen doesn't tell you his plan. There you go. But again, the plan hasn't been told, because it's already been told on the letter that he wrote to the board 4 years ago. So that plan has been implemented, has been kind of come to fruition throughout time, right? He's trying to build the number one gaming company in the world. I mean, come on. Is GME number one yet? No. So until that happens, there you go. So that's the vision of what Ryan Cohen trying to achieve in this company. And of course, to be the number one retailer gaming company out there, whether it's technology based, whether it's, trying to capture the maximum amount of market shares on every category that GameStop is doing. See what I mean? And so, but yeah, the vision is there, the mission is there, the vision is there, but people just doesn't see how coming from a nearly bankrupt company to now almost breaking even, right? Oh, actually, we are breaking even, not even almost breaking even on the operational size. And then on top of that, they have a cash pile of the largest cash pile in retail space, one of the largest anyway. And so what more can you ask for, I don't know. Again, I see the vision there, but again, it might take another 10 years for that vision to come true. And by that 10 years, the most loyal shareholders going to stand to benefit the most. Yes, traders going to come and go. They just going to buy and sell and whatever, thinking that they could predict the price, predict the future. But I could tell you this, I'm not good at day trading. Not very good at it. So that's why, I pivot to a long term, really, because I could see, because I have two different accounts here, that I could see, okay, had I stayed, I would have made so much more money than just trying to time the market in that sense, right? Case in point, XRP, case in point, Bitcoin, case in point, Ethereum. I hold Ethereum 3 years before I sold it, because I was just accumulating Ethereum at around, $300 a coin, and then I 10x that. Of course, at that time, I didn't have the nearly amount of money that I have right now. I wish I had that much to put in. But my point is, I multiplied it, my savings to that level, right? That I could not even imagine the amount of money that I even made on my job. So again, the value that I see for the long-term shareholder is so immensely that, again, less stress to, like, why would you want to, time something like that? And, if you see the vision, the mission, that whatever security that you are investing in, it doesn't have to be GameStop, you guys. Any security at all, Had you buy NVIDIA back when it was $100 a share, yeah, you'll be happy to, but you have to buy it 5 years ago, right? And then have the stomach to hold until it goes wherever, Case in point, Tesla that I bought like 7 years before, had I held that position, just 2 shares, I would have close to 30x my money. I mean, again, that's the long term, right? Did I hold Tesla share? Of course, I didn't hold it for long term. And so I was just, again, starting my, to learn about the market. But had I know what I know now, of course, I'm going to just hold it for a long term. And this is why I divide my strategy in GME. GME is my next 10 years worth of, investment. And yes, I'm going to continue to add. I'm going to continue to multiply that account, the long-term account, maximize the amount of multiples that I could, as much as I can, right? Let's see what else. Hi Asa, what did you delete there? Welcome. Asa, did I say Elsa? Goodness. Okay, so back to the rant. I don't know why I went off of that, but okay, so let's see. That's one indicator. I just found out a new indicator that I was using. What the hell? How can I delete this? Delete the plane. Okay. This one right here. This is a 0 lag trend indicator. I just found this out. So again, if you want to be a day trader, right? This tool, I guess, it's pretty good at trend. So yeah, you might be right that the trend is coming down for GameStop right now. So the next level, as Manuel was saying, it could be low 20s, but in my opinion, it's just going to go this level right here. But over here is a support zone. Over here is a resistance zone. So it could go even lower than that. So the next one that I'm looking at is 22. Why 22? Well, it's back here. The nearest support zone. Like the highest one, most highest recent one. So if we break 22, then of course. But I think around here, people are going to start to buy more. And long and behold, there's a couple of support over here as well. And of course, this used to be a resistance. So if we could flip 22 as a support, I think that's going to be a strong support right there. Yeah, people might try to time this so that they don't. I mean, when I said people, just the day traders out there, they might want to save close to 15% downtrend from here. I think, they're going to try to spook the market quite a bit because of the tariffs is coming. Apparently today is enacted. So Monday is going to be wild. I think the S&P 500 will be trading gap down perhaps. Again, don't make any trade based on this. Just try trying to. What do you mean, you people? Huh? Could you be more specific? Did I say you people doing what? Huh? Come again? But anyway, welcome to the show. So let's see. Now the tariffs is going to spook the market a little bit here, and it's already been kind of like let's see, Friday. Friday was a crazy one. It's a joke. Okay, good. God, my heart was just like, man, people are just attacking people. It's from a movie. Okay, got it. Okay, so this might be the top, the double top over here of the market. And if it breaks this trend line, I'm sure all the traders in the world is going to spooked out of the market. But it might explode higher, You never know, because tariffs is really good for businesses, right? I don't know. I'm half kidding, you guys. I have no idea what's going to happen. But you could go back in time to Trump last presidency and what happened during that time. Was it 2016, right? Am I doing that right? 4 years. Yeah, 2016. Right there. Okay, back in 2016, he came to office. Stock went down immediately. Okay. 15%. S&P 500. And then up from there. So what do you think is going to happen this time? Come on. Yes, there might be a dip to try to shake out people coming into the market, or try to spook out some traders out there, and maybe a dip of 20%. I guess you could say that, that's going to be the excuse for them to reprice everything. Every company's out there. But yeah, it's going to scare some people out for sure. Will GME drop down to that level? That Manuel was saying, I mean, it's possible, right? Again, anytime when people are panicking, they will do irrational things to their portfolio to try to save whatever they have. Usually it's retails out there, or unsuspected, retirees out there who thinks that, or believe that if you don't take your money out, you're not gonna get any. So yes, you lost 20%, but cut your loss and then go. That could happen too. But is this the crash that we're all kind of like waiting for? I think so. But again, don't make any trade based on this. Let's look at the bond market real quick. What topic? Oh, Tropic Thunder. Watch Tropic Thunder and you understand the joke. Okay. See, I'm very bad at pop culture. You guys, like, I hardly watch any movies. And so I usually just stick with like documentaries. Pretty boring person here. But yeah, I haven't watched any like pop culture movies. Let's see. I should watch that. Who was on that movie? Like, who plays the main character? Let's see. So this is the 20-year TLT. It's kind of curling up. Perhaps this is going to be the head and shoulder, right? Formation here. Inverse. So when the value of TLT goes up, usually the rate's going to come down. And when rate comes down, what happened? Inflation, right? Equity is going to be equity is going to do very well, because people, tend to think that if the rate's coming down, what's the point of buying treasury? What's the point of parking money in 5%? Zero risk when you could make 20% in the market. So risk on. Risk on means, Jimmy's going to be, going higher. If the rate's going higher? Sorry. Robert Downey Jr. Okay, I recognize the guy. Ben Stiller, Tom Cruise. Okay. All names that I recognize. But yeah, I have not watched that movie. Oops, sorry. Mama, happy. Okay. I'm sure it's a comedy, right? Yeah. Okay, so let's talk about. So we covered the bonds. Let me see. Okay, so the 10 years kind of coming down a little bit in comparison to what it was before. So perhaps people were just trying to, feel out where the market is, whether the tariff's gonna increase, any inflations, and that's gonna put pressure on some of the company that has a lot of debt here, and again, some bond traders usually are smarter than equity trader, right? That's the conventional wisdom. And so they usually, are more macroeconomic type of, 10 years or more type of people here. So a more stable investor out there. And so that's why, the bonds market is pretty important to kind of, peel your eyes into, to at least if you want to predict the market where it's going to go in the next 10 years, then the bond market is going to tell you a lot more about the, whole economy over here. So a couple of weeks ago, I'm sure you've heard about the 10-year bond when went to as high as 4.7 briefly, and then now it comes back down to 4.5. Now typically you want, the more time you lock your money in, the more rates that you want it, right? It should be higher than the 3 months. The 3 month, because of the Fed, has been raising rate on the short dated bond. That's why, people would be like, why would I risk putting money in equity when the Fed's going to pay me 5% risk free? And so that's why you see Warren Buffett taking money, holding cash and all that stuff just to stay safe, right? But how long can they do that? Until, the bubble, it's probably still inflated, right? Maybe perhaps there's still trillions of dollars still from money printing era, like 3 years ago. We print so much money, trillions of dollars, in order to kind of, support the economy when the whole world was shutting down. So now we are at the tail end of that. And so, again, is it hot air? Is it going to burst anytime? And I think that's why Warren Buffett has been preparing for that, to staying in cash until it busts. Then okay, until all of the risk is out of the market, then that's when the long-term investor is going to come in. And I really think that's where Ryan Cohen is doing too, is very aware of what is happening in the broader market, right? And that's why he was cutting stores as quickly as possible without crippling the company balance sheets. And again, that's why I stress the importance of paying off debt. Even in your personal life, you guys, come on. You know, it's common sense here, but people, because there's so many companies out there that have so much debt, we just grow accustomed to own companies that have massive amount of debt. And that's bad, right? Why would you want to own companies that have so much debt? Well, they have more asset, they have more ability to earn. Well, you have to earn 10% on top of what the economy is trying to get you. And so you have to charge your customer a lot more. Now, when the consumer is crushing because of high inflation, tariffs going to be placed on every goods and services right now, coming, in the near future, or starting today, actually. That's going to, bring the consumer confidence down. And so why would you want to do that to your company, right? And I think Ryan Cohen understand that perfectly. And he understood it 3 years ago. That eventually, the company that is spending money like crazy 3 years ago is going to be suffering, and shareholders was going to suffer. I mean, case in point, AMC, right? I mean, look at the amount of suffering that AMC shareholder has gone through because of the leadership. Because Adam Aaron, instead of saving that $2 billion that he had from shareholder, what did he do? He buy movie theaters, he buys gold mine, he spend money on popcorn stand or whatever, And after all that, he raised more money, he do a reverse stock split. Close to $4 billion, I think, Again, I didn't do all the exact math, but, for AMC shareholders out there, please tell me how many times has he raised money? How many times has he decimated shareholders because of the choices that Adam Aaron had made 3 years before? Meanwhile, you have GME leadership that has different way of doing things, right? And more sensible way of doing things. Yes, it takes a long time for people to have their MOAS or whatever, but shareholders who are loyal to this company did not lose any, okay? Unless you bought it at $100 a share and never add more at the low. You see what I mean? If you bought at $100 a share right here, let's see. If you didn't believe in the company for the long term, right? And you bought up here, FOMOing in, and never dollar cost averaging down, yes, you lost what? 70%. So say 80% at the current price. But do you really think people would just buy it at $120 a share and never add anymore? If you are a long-term investor in this, of course you're going to add more. Because you believe in Ryan Cohen. You believe in the leadership. You believe in the vision of what leadership is trying to achieve in this company. And again, that's why I'm like baffled when people are not really thinking through on what they're saying about this company. And again, media is going to exploit that to the max. They've been exploiting it for 3 years, you guys. And in the meantime, they are pushing you to other stuff. Oh, pay attention to AMC. I mean, I still see AMC video. Some guy, where is this? Let me see. AMC. Still, push. Yeah, AMC. And again, like, how many times can you hear about, oh, GME is just the same thing as AMC? I think Matt Core just did a video about how, those people are stupid. AMC and GME, like, again, attached the two people, or attached the two company to the worst company ever. And again, this is the tactic. I'm telling you. And for me, I love it. You know why? Because then less people understand what GME is until GME could prove to the world. And when they proved to the world, that's when shareholders gonna benefit so much more, because now people are gonna FOMO in. They're gonna buy in because they're like, wait, I thought GME is just like AMC. The whole world is thinking this, you guys. I'm telling you, like, not many people really know the in and out of what GME is trying to achieve. And if they do, they have that, loosely, evaluation of like, oh, it's just gonna spike and then it's just gonna go. And so, most traders out there, they're just waiting for that spike. And then they're gonna leave. And that's gonna be another opportunity for long-term shareholder to buy in on their stupidity, right? Because in the long run, the $100 a share, it's just gonna be a blip, just gonna be a blip, just like this one, because the growth is compounded. The 8 wonder of the world is the compounded interest over time. You know why? Because they have so much money that they don't know what to do with. I mean, so much money, right? Because, let's see, just the interest alone, it would bring them $200 million. Imagine growing at $200 million a year, and you use that to an R&D, right? You deploy that $200 million a year and still have the principal, and then you grow the company that way. I don't understand why people don't see the 10 years horizon. And not even 10 years, how about 20 years horizon of this company, how it's going to be growing so much quicker than people. I think GME is going to grow much quicker than Amazon would. Okay, so you might not even have to wait 10 years for the growth to the sizable amount like Amazon, right? But again, like, people are just so short-minded because now the bubble is bursting. I'm sure it's going to cause so much, turmoil in people's rationality on how to evaluate this company. And then when they see the price down, they're going to get so depressed. They're going to be like, oh my God, GME is at $20 again, instead of saying, this is the opportunity to buy more equity in this company. I mean, how is that so complicated to people? I don't know why. I mean, maybe I train myself to always buy on the red. and there you go. That's probably why. Let's see. AMC didn't reach its high until June. Kramer was pushing. Yeah, I think that's why it clues me in that AMC was the plant. You know, I wish I knew that before. You know, I wish. Okay, let me see. What am I trying to say? I wish I knew that when it was at the all-time high. I would have just sold it at all-time high. Because had I sold it at the all-time high, I would have had more shares of GME in my pocket right now. But it's okay, you know. I feel like I have enough shares of GME to if MOAS ever happens, I'll be set, you know. And even if MOAS doesn't happen, just the growth of the company alone, you know, I would be set, you know, by 10 years from now, hopefully, right? That's what we're all here for, just to try to retire early and hopefully, you know, gain that financial freedom that everyone wants in this world. And yeah, that's what I'm hoping. Let's see. Okay, hope you're relaxing. Yes, of course I am. Every time I talk about GameStop, I'm relaxing right now. It's the funnest thing ever in my whole life, right? Yes, I don't have a life, you guys. Come on. You know, I get that. But this is my outlet, so, but thank you so much. Yes, 51 shares, for sure. 51 share. Let's effing go. I can't even say the word, you guys. Like bad words. No. Let's block this person, huh? No, I'm kidding. Yeah, how are you guys doing? How do you guys feel about the economy? How do you guys feel about the tariffs is coming? People are freaking out, you know. And as they should, right? I think the market is due for a correction, you guys. It has been like that for so long. And you know that the richest man in the world right now, Warren Buffett, has the most cash ever. For what, right? You have to kind of question yourself. And he had increased his cash position for quite some time. You know, his rationale is that, you know, what he told the press is that he's just waiting or preparing for the tax, right? That, you know, tax is going to go higher for him. And so it's better to have cash to kind of take care of those the tax implication for his holdings. But I think there's more than that, though. It's more than that. Is he going to have to pay $180 billion? Is it even more, I feel? Or it's just going to do that? It's going to shit. Okay, very pessimistic. Is that the sentiment, though? Anyway, so I just found out about this zero lag indicator, but every time it goes kind of dip down over here, about to reverse, it just keep going, you guys. It's almost like the plunge. Remember that there's a team that was assembled. It's called Plunge Protection Team. And so maybe that's what they're doing right now, just to make sure that the stock market doesn't crash and cause those panic. And I don't know. Again, just me speculating, you guys. But there's a real thing, though, if you do a research on it. Plunge Protection Team. And then, but yes, to me, it's due for a correction, and the next support would be over here. That's gonna be a steep drop, you guys. Shit, people are gonna shit in their pants. But this drop over here, let me see, back a year ago, yes. So a 30% correction. would not be far off. So when that happened, GME might come down with it as well. But how low though? Let's see. 40% correction. Oh my goodness. If that ever happens, you guys, can you imagine the amount of press, GME is going down to the toilets. What is leadership doing to this company? Ryan Cohen is what is it? It's a dog that catch a speeding train, something like that. In the meantime, he's doing everything he can to make this company better and showing it on the balance sheets. But yeah, people are not going to look at that. I'm telling you. Let me go back to my original thought here, that not many people know this, you guys. The media had you believe that all the retail in the world are in here, right? Yes, retail own most of this company, but most retail are going to sell. They will sell at around what? $50, right? $60, $70. They're gonna jump out so quickly without realizing, in 10 years it's going to be a lot more than that. And also too, shorters, I don't know if shorts ever close. I can't speculate on that because again, what I see now is only 8% short interest, just for reported shorts. And so, since I don't have any data to back it up to see where the swap's going, and usually the swap, it really doesn't affect the underlying stock. They're just betting on each other right here. Back in the big short time, I guess they did a swap or something. I have no idea, but it's so complicated. Again, it has nothing to do with the fundamental of the company whatsoever. Nothing. 10-year cyclically adjusted PE ratio of the stock market is double. See? Moving average that takes into account economy cycle. Yeah, it's due for a correction, right? Or at least 20% or 30% drop for sure. I mean, the earnings, like Apple's just have their earnings, and apparently they were warning, the next 2 years they're not gonna spend any more money, and they are going to start to position themselves to fix the balance sheets and all that stuff for cash flow, like focusing on more cash flow than anything. When GME has been doing that for 3 years already, been preparing since then. So we're stand to benefit in this environment more than any other company in the world right now. Oh yeah, believe it. Company GME is going to come on top in the next few years. While people are closing store left and right, we have the ability to hire the top talent because we have the money to do that. Most companies right now are doing what? Laying off people, including Meta, including Apple. I'm sure Microsoft just lay off a whole bunch of people too. So where do you think those talents going to go to? GME. Dare I say it? Who would want to work for GME? Okay, if you don't, you might get some stock compensation here and, work for the company for 5 years and then get to retire for the rest of your life. Why wouldn't you? Right? And on top of that, if you don't have a job, you need to maintain your lifestyle, right? Those tech people, they have they have talent, but they also have bills to pay, high bills. my point is, people are gonna flock into work for Jimmy, even though the reputation back then is so bad. That because of the media, right? Media has been attacking the company. Even right now with new leadership, they still have the same old script that they go by to attack GME fundamentally. And they're going to continue to do that until most people grow sick and tired of it, or just forget about GME altogether. And then a couple years later, guess what? They're going to bring some people in bullish on the company. Mark my word, 2-3 years from now, you're going to see the media flip on GME. The same thing they are doing right now on XRP. I'm telling you. XRP used to be not mentioned. Maybe a brief mention. Oh, Bitcoin's going down. XRP, the third largest, is falling to the seventh largest, or whatever, right? But they never tell you to buy at the low. Like they never pump it up over here. Negative news over here. Negative news over here for GME, right? And they do that time and time again. Because again, poop and scoop is a real thing, you guys. Understand it, and you'll be like, every time the price drop down, make that your opportunity to add more to your position. And wait patiently. What rush do you have? Unless you need the money tomorrow, then okay. Then try to, do your best to predict the price movement, right? I've done it. I try to do it, to see, on my call option to see if I could earn 10 times my money in 2 weeks, right? Everybody are enticed to do that. So, but my point is if you think of it a long term, you might be beneficial for you a lot more. Anyway, sorry about that, you guys. But anyway, Carter over here is correct. You probably shouldn't watch Tropic Dinner if you are trying to stay away from. Oh, there's a lot of foul language. I mean, I don't mind hearing it, but I just hate to say it myself. Again, brought up in a household that I'm not allowed to even say the F words. It's okay. I mean, some people are just more expressive than other, and I respect that. Okay, if you just saying it for fun, but oftentimes, when you're going to that far, it's just an expressive of anger. Like it makes you more angry than you should be. If you say that word. Like, hypersensitive to things or insensitive to other people's minds or other people's well-being. But as far as it's all about intention, right? If you say it to hurt somebody's feeling in order to make yourself feel better, I feel like you should have a different way of coping. Don't do that because it's not good for you, in a personal sense. But if you say that to make people happy, to, cause laughter and all that stuff, that's a better way to go about things. And so, yeah, I want people around me to feel good about themselves, and that makes me a lot happier because the negative energy in the room really brings you down sometimes. You just have to remove yourself from that and refrain from having to calling people names and all that stuff. Sure, it probably will make you feel a little bit better, and at that time being, it's like, oh, I got him, right? I got that person to feel bad, for that moment in time. But really, is it worth it though? Yeah, just my personal opinion. Right? doesn't really matter. Egg toilets are so expensive. And yeah, that's what oh my God, I haven't even, let me see. Last time I bought eggs in Costco, it was $5, but that was like 3 weeks ago though. See, I don't cook. Well, I don't cook often at home. So usually, I would buy eggs for however long. So it's been three weeks ago since I bought it. Maybe a little bit more. And I still have like 12, 12 of them left. And so I haven't gone back. So hopefully that's going to last me another 3 weeks, and then we'll see what the eggs is right now in Costco. Do you buy your eggs from Costco? And if so, what is the price right now? I'm kind of curious. I haven't even gone to Costco lately. And toilet was so cheap. Yeah, our enemy. I would throw, yeah. It's ridiculous, you guys. Like, I think the inflation is just out of hand. It's hard for me to blame it on any other, I mean, some people would say corporate greed and all that stuff, right? Some of it true. I mean, some company, they just price gouging people, even though they don't need to raise the price that high. They still do it anyway because they take advantage, right? Because most people would just say, oh, I'll pay it anyway because, again, inflation, right? That's the rationale. And so long as people are willing to pay at that price, they are willing to sell it to you at that price. And so some of it is also consumerism, that we kind of like train to be okay with the price increase. I mean, some people just mindlessly shop without really thinking about the price, and then next thing they know, they're like, wait, that's like 10% of my income. What's going on, right? So it doesn't hit them until they already make that choice to do that already. And then they just continue to do that until they couldn't do it anymore. And then they go to debt, credit card freaking balance for consumers. It's over $1 trillion right now in the economy. And I don't know how people survive in that environment, and how can the economy grow when consumers stretched to the max here. And we've been like that for 3 years, you guys. So yeah, we're gonna be in a route of awakening for some of these companies that thinks that they are just going to increase the price and people are gonna take it. At some point, people are gonna be like, okay, enough is enough. I'm not gonna buy anything. I'm not gonna go any. I mean, I already do it in my life. Every time I go out, it costs money. It's like, what the hell? I'll just stay home and talk about Gamestop. There you go. Don't get me wrong. I do go out, with my friends. Once in a blue moon, they know when to invite me, and they know that I, usually just say no. It's like, you guys have fun. I'll be fine. And then they just send me, photo later. It's like, Anyway. No, they don't taunt me like that. But yeah, they know that I'm all about, kind of stock market and all that stuff. They just leave me alone. It's so funny though. But yeah, so one in the blue moon, I would go out, but not very often. Not very often. Okay. Servant leader is. Oh, see, plunge protection team. It's a real thing, you guys. What? That's of course. And I think, again, there's so many corruption, so many connection from the government to the private sector. And it used to be kind of frowned upon, right? Because you don't want the government to be so powerful as the private sector. And these two shouldn't be coming together. And when these two come together, these two powers, the private sector and the corporation who has the money to do whatever they need to, versus the government who have the power to do whatever they need to. These two are dangerous, you guys. Like, if they combine the force, who are they coming after? Us. Us, the 99% of us who, have to, go to work to survive. And so if they combine force, and again, this is why things just go into shit, it seems, right? I mean, look at the architecture. Let me just rant about this real quick, because it's kind of been a frustrating topic. Nothing to do with GameStop. It's more to do with the quality of the product that is being sent out there. It seems like after COVID, they just don't care about the quality of the products anymore. Every single, items that I receive from my work has this defect, right? Like, they don't package it well. They don't do anything to kind of improve. And it's been deteriorating as we speak. And so, until this day, they didn't fix it. And so on top of that, they charge you double the price. And so, so where'd the quality go? I mean, look at the housing market, right? They keep saying, well, it costs more to build a house. Well, how did you decrease the price? I thought the technology, you have a 3D printing house right now. Why is it so expensive? Right? And they're trying to, make the robot to make everything. So why are things so expensive still? I thought, I just watched a machine making glasses in 2 minutes. Not even. And why am I paying $500 for a pair of glasses? Right? Thank goodness I have insurance, so some of that is kind of covered. But why is it $500? Makes no sense, right? Yes, it depends on what frame you picked, but if you pick a decent frame, Ray-Ban or whatever, it costs so much. Yeah. So I don't know how to fix this. I'm sure there's more smart people who would try to fix thing. But anyway, so that's just my rant here. I feel like at some point people are gonna realize what is the quality of life anymore, right? I mean, is the function of the government is to aid and abet the corporation to take as much as they can, or to spread that wealth to the rest of us who are actually doing the work, right? So I don't know, you guys, just my frustration here. Free market capitalism has been kind of hijacked, I think. It's been decades of just whoever is the closest to the money printing gets to benefit the most. Okay? And that's why you see Meta, you see Apple, you see a lot of companies out there that are aligning themselves, to the government side of things. Palantir, think about it, government contract, right? A lot of companies are, that's their money-making arms, You see Walmart, food stamps, famously food stamp. Most of their workers need food stamp to survive. And on top of that, what happened? Because their products is so cheap, who are they shopping with? The people that works there, of course. They're most likely to shop at Walmart. And so technically, Walmart get to benefit twice. Not only that they get to benefit from not paying people a living wage, but also stand to benefit from the spending, of those food stamps, money, because people couldn't afford any other store. They would shop the cheapest and the most. It's just the economic of things, right? So, I mean, how do you fix that? Well, you have to. The role of the government is to make corporation pay the living wage, right? And let the market decide that way too. But but also to go after any organization or companies that are predatory, in their practices, to try to scam people. But it seems like it's been eroded. The morality is not there for the stock market to be at least, good actors like IEX CEO. Yeah, those type of people needs to be elevated for any chance of us to become at least, calibrate society to at least a little bit more equal. Not that, 3 people own $1 trillion worth of the economy. Like, that's bad, you guys. The fact that so little people have so much money then they know what to do with, it's not good for any of us, right? Because they have the power to change your life. I mean, look at Bill Gates, right? Think about the vaccine nature of things. How is it that he is single-handedly creating a vaccine that may or may not be effective, but we are forced to take that vaccine no matter what? Now, I'm not saying I'm anti-vax or anything like that. Think about that. Why is it one person have that much power? Because of the money, right? Because of the lobbyists, because of whatever. So, and on top of that, he buy a whole bunch of farmlands, right? So what is he planning to do? So is he trying to make food scarce so that you cause this chaos for the rest of us? I don't know. Again, I'm just like crazy, right? Crazy. Those are the questions that you need to understand. And there's a lot of other countries like Sri Lanka, for example. They are vehemently against what Bill Gates has been doing, or at least his organization anyway, to try to kind of decimate the crops, and I don't know, again, I don't know how many people are actually aware of that, but what I heard is that they were unable to grow eventually because they've been using, a lot of chemicals. But I don't know if Bill Gates was the culprit here, but I'm sure Monsanto's and all that stuff has probably play a role in that too. So again, that's why the scarcity of food has been kind of tampered with, so that they could increase the living cost of living forever until the end of time, until we can't survive anymore. I mean, look at the fact that people are not, would choose to not have kids because they can't afford them. I mean, and for people who could afford it, it's only a matter of time that they will stretch to the limit too, So, yeah. I mean, doom and gloom, right? Sorry about that, you guys. I rant. Let's switch gear. Let's switch gear. It's a bit too gloomy. Let's talk about something more less gloomy. They deplete the soil. Yeah, the soil, the topsoil that I mean, nature is really good at correcting itself if you know how to, kind of like live off the land. I mean, I'm not a gardener, but I understand that the way that we set up our society do not replenish the topsoil that is needed to grow all those food. I don't know how many people know about the US. Back in the 1800s, okay, it was all forests, all topsoil. The Midwest was like the biggest topsoil out there. You could grow anything, right? Well, yeah, not everything, but anything that is locally grown could be grown. It's not just a dust bowl, right? But because of the, people logging and, just cutting trees mindlessly over the 100 years of, expansion for the America, like, we have been kind of decimating the topsoil. And so that's why, you get a lot more wind and dust storms and all that stuff growing. My point is, you could replenish that back just by, reforestation. You've been seeing a lot of, agriculture movement in other developing country that has been doing that. China, like they're trying to green the Gobi Desert. I don't know if you've heard of that. Like Gobi, China. It's like reforestation. Reforestation desert. So over the years, now this takes a long time. I know, we don't have the patience to do it because, we could make trillions of dollars in a snap of a finger. So why go through that effort, right? But again, with that, you don't have a healthy economy because the top people would just do whatever they want. But again, this is the wealth of the country, you guys. Your health is much more important than the wealth. Because at some point, how much money do you need? The only thing you need is the health. I mean, you don't have time to spend with your loved ones and all that stuff. But anyway, so if you want to do research on that, it's amazing how they have been able to turn a forest into this. And it's simple, right? Just slowly building those forests over time. Yes, it takes time, it takes effort, but they do it. I mean, 50 years. How about we make robots doing that for the people? Of course, they're not going to do that. Let's see. And this is only 4 minutes long, but hold on, let me see you guys.
To contribute to the
So again, we don't make the efforts, even though we have more money than we know what to do with. It just doesn't, benefit the corporation. So why do it, right? And corporations out there that make trillions of dollars, billions of dollars, they're not putting it back to the economy. They just buy their own stock back to enrich themselves. So that's why you have Apple. That's why you have Microsoft. Even Warren Buffett buy his own stock back, right? It's ridiculous to say that we can't do something about the environment. And yeah, it takes 50 years from, hold on. When did they start to do this? Let's see. And again, this is what, let's say, communists, communism is bad. Well, I mean, we're capitalism, right? But we're less healthier than these people. I'm not saying that communism is good. I'm just saying at least there's some good comes out of it just by, kind of make people volunteer to do this. I think like every citizen has to volunteer an hour or something. But again, they were able to achieve this. Pretty astounding. See, well, let me see. Let's see.
For ways to simplify the process. The Chinese government said during the National People's Congress in 2021 that they will raise the proportion of territory held by force from 23% to 24% by 2025. While the Great Green Wall project has shown potential, it is not flawless. Some opponents of the initiative are critical, but the majority are anti-monoculture. Most woodlands just contain one tree species, rendering them vulnerable to epidemics. Numerous trees have been devastated by plant disease. The World Bank advised China to prioritize tree species quality above number. A forest debate occurred a few years ago. Large Chinese cities, particularly Beijing, suffer from pollution, which increases year after year despite government efforts. Smog is pushed out by cities by the winds. However, this has become infrequent. The new
Look at the air quality, you guys, like in the city. Oh, man. See, there's no planning there. I know, like communists, right? People are like, oh my God, communism. Well, then you just have to plan better, right? I don't know.
Cities by the winds. However, this has become infrequent. The new forest plantings may have hindered air movement, resulting in stagnant air in cities that cannot be cleaned. Zhao Yongli, the People's Republic of China State Forestry Administration deputy head, had to explicitly contradict this claim. Trees, he believes, can only hinder air circulation near the land's surface. In any case, the benefits exceed the drawbacks, notably their engagement in pollution reduction. There are certain downsides to mass tree planting. Farmers in southwestern China were spotted removing native vegetation to earn government funding for spreading non-native plants as part of a government effort. Then there's the water. Large areas of China, especially in tree planting zones, are becoming drier. The project's thirsty non-native trees have depleted groundwater resources in arid portions of northern China. According to a 2019 study, semi-arid areas in China increased by 33% between 1994 and 2008, compared to 1948 to 1962. According to a 2004 study, just 15% of trees planted after 1978 have survived. The good news is that the National Forestry Department has recognized the error of planting trees in dry areas and has moved to cultivating shrubs that need less water. Well, that's it for today's video. We hope you enjoyed it. Don't forget to hit that like button.
Anyway, so I mean, it's pretty cool. But yeah, this take like 50 years, you guys, to do. And I'm thinking, isn't there a scientist out there who could figure out how to grow a tree a lot faster? I'm sure there is, but it doesn't benefit them, right? It benefits the people. So if you have a healthier population, it's less likely for people to be controlled. I mean, it's very easy to control people when you're not healthy, you're depressed, and all that stuff. Again, I mean, is it a conspiracy that they're trying to depress us all? I have no idea. It's for you to decide. But I mean, you've heard about like youth depression and people feeling a lot more lonely than the rest of the generation before, because of the technology, social media, and all that stuff. And then you're just wondering why. Why is that? I mean, you could blame that on the individual, like, well, because they're stuck in the screen. But there's a lot of tactic that Meta in particular use. I don't know if you've heard about social. What is it? That documentary, where people who used to work for Meta left because of the ramification of those programs that are addictive, programming, like the doom scrolling, right? You're just endlessly scrolling to keep engagement, and the notification that every time you have somebody post on anything, you just get a notification right away. Those are tactics to keep you on the platform for a long time. I mean, YouTube does it right now. So it's useful for them, of course, screen times and all that stuff. We are all constantly online. And so that's why they're the behemoth that they are, because they actually know you much better than you know yourself because they have a file on you at every turn. Every single page that you click on, they know, okay, oh, this is the suggestion of the next one. And so you're more likely to click on those. And I guess like Meta had some trouble in that too, where, you know, they get sued for, I guess, election swaying of some sort. But anyway, that's back then. That they would intentionally show you a certain, emotional post just to get you to be emotional about it, because they know that you're more likely to agree with this and would purposefully show you, just you know, that particular article. It's like, okay, here, you know, this article says that GME is a piece of shit, right? For example. And then, you know, you would be like, that's not true, right? And of course, that's going to cause you to be so emotional about whatever, right? Even stock or whatever. So, but anyways, let me switch gear. I know, I keep saying that. I keep saying, oh my God, what? 60 eggs? Crazy. Okay, I got this 34 eggs one for $5. So yeah, it's increasing. I'm sure it's going to be $8 or $9 for sure. Yeah, oh my God, double. All right. I will stop eating eggs until the end of time. Man, okay. I'm at a cabin with the family and I'm going to, oh my God. Oh, thinking that's amazing. Well, at least you get to enjoy your family and also save some money on eggs at the same time. Very smart man, very smart. Bill Gates got a TV generator saying GME was, of course. I think he may be been shorting as I know, right? I think I saw your video on that. Of course, like this guy, you know, when people are saying he was philanthropical, you know, he's vowed to give most of his wealth by the time he die or whatever. It's like that, therefore he's a good guy. I don't know, again, what is his motive. But if you're giving away money and your foundation makes more money than you know what to do with, then it seems like it's just a front to not pay tax, in my opinion. Because all of those like, philanthropic that he does to the other country really harm other country more than helping them. I mean, how many vaccines did he test on those, you know, poorer country before? And again, like, you know, this is controversial to talk about, but I don't have any evidence to accuse the guy. But I mean, I don't think he's that good of a person, in my opinion. But I think he does more harm than good in the world at net balance. Because if he's just like shorting something, and is he trying to save the world by shorting GME or Tesla? I don't know. Or he's just trying to make as much money as possible to get as much power as he can to do something. I don't know what he's trying to do, honestly. If one person could change your life, the lives of millions of people, is it worth it though? You know? I don't know. It's good to ponder, but it's above my pay grade to even think about that. You have to rotate crops. Yes, crops is good. That's because I can. What's up? What's up? Okay, you show those bears. Who is the boss? Okay, all right. I will try. I'll try. If there are bears in the wood or the stock market, yes. Hey, what's up, Lino? What's up? What's up? Hope you're doing well over there. Nice, nice. Bill Gates and Epstein sitting on the tree. I know. Love the stream. Have to head out. Oh, I'm saying thank you. Peace out. All right. How many people are still here? Raise your hand. Congratulations. You have win a prize. I just don't know what it is yet. So, yes, put your name out there and you will win something. Nah, I'm just kidding. Okay, so let's talk about the institutional ownership. I know not much change, you guys. Like, I'm sure you've seen this one already. But again, I have no idea how to read to this because look at this, like share price. What are they trying to say? No idea. But just based on the pictographic itself, you see, it seems like the institutional ownership has been increasing. Okay, this is from Fintel that you are seeing. January 24th, 2024. No, sorry. So it says here, the share price as of January, as of yesterday, January 21st, 31st, 26, right? So a year ago, it was 14. Since then, okay, this has been an increase of 80, close to 87% increase of institutional ownership. So I think this is trying to say that most institution from the 14 price point to today's price point has increased their position to the tune of 80%, 87% or more. So that's a good thing, right? Meaning that they are increasing their holding. Okay, it doesn't mean that institutional ownership is 80% of the company. I think that's what people are missing on that. So the total ownership only amounts to, I don't know, like right here, 34%. Okay, 34%. Now, I don't know if this includes Ryan Cohen or not. So it might be different. So that's why I was like looking into it on the other platform. I'm pretty sure that Intel includes Ryan Cohen's portion with this one right here. Okay, so just keep that in mind. But if you look at, let me see right here. So this is more along the line of what institutional ownership here. Like the correct one, right? Because it seems like it doesn't include Ryan Cohen's portion here on RC Venture, right? So still at around 28% institutional ownership, still there. So again, so in my Ryan Cohen leadership would have to prove to these people even more that the company is doing well, the company is going to grow, the company is going to ramp up their revenue campaign to, or at least marketing, they haven't spent that much on marketing this past couple years because they were not profitable. So they would just use the leverage of X account to, again, because of the whole hype on the price action, Roaring Kitty comes back and all that stuff, to engage more and more people to go to the store and buy some goods and services, right? And they have been successful at, Pokemon cards. We've seen all those people lining up to buy the latest Pokemon cards. So again, I'm not worried about the slightest of what, Ryan Cohen and leadership has been doing in the past 3 years. But as far as the institutional out there, they need some proof, and of course, they could only do it after the facts already. I mean, again, this is the opportunity for retail, because retail don't have to answer to anyone to buy into GME. And so you have the opportunity to buy it much quicker than the institutional out there. And if you don't see that as an opportunity, I don't know what will present to you. What can I put in front of you to see about this company? Okay. Good. All right. Roll call. Thank you for still being here. After all that rambling, you guys are animals. I don't know what's happening. It's just like, maybe we're just like addicted to GME, perhaps. That's why, Oh my God. 51 gang, huh? That's so funny. All right. So it seems like nobody has been buying in terms of insiders. So we're waiting. Of course, we're waiting on Ryan Cohen to increase in his position. But even if he doesn't, I mean, he still owns more shares than most of us could accumulate. And so, will he? I mean, I feel like he should, you guys. Like, he should. See, in Intel, they only show less than 1% insider ownership. So, you know how Ryan Cohen just transferred the share? Perhaps this is what he's trying to show to institutional out there who may not be aware of what Jimmy is trying to do. And look at this, right? If you are an institution and trying to convince your clients to buy into GME, if you see that the institutional ownership is only this, how can they make that choice, right? Maybe, that's one of the metric that they're using to determine whether it's worth buying into the company or not. And again, every institution, every hedge fund or pension fund managers or whatever, wealth managers of some sort, they might look at this and say, hey, I don't want to touch anything that has no insider ownership, right? So him transferring to his name might give this number over here a little bit of boost, right? Again, just speculating. I might not hold any truth to that. Just me speculating. That's all we could do, you guys. Like, come on, as a retail investor, unless you're very good, well-versed into the nitty-gritty insider, you would know every single move. But as an outsider, you could only speculate on what the move might be. And if you're good enough to do that, then you stand to benefit so much, in the future. So let's see what else. Okay, so see, RC Venture is right there. So they just take that. But see, this is what I don't understand. Like, it says insider, but then they don't account for this at all. It's so weird, right? I mean, just that alone, that should be around 8%, not not less than 1%. So maybe that's what he's trying to solve, is that there's no confusion. He's one of the insider. Boom, done, less amount of work going into that. And remember, he is posting the, what is it? Public relation, right? Public relation position to try to bring more investor awareness of what Jimmy is trying to achieve, and perhaps trying to onboard a lot of investors out there, like institutional level, to back the company and to at least promote it. And to do that, it takes some work, right? And perhaps that's what the preparation is. Nothing too much, like whether it's a share count or whatever people want to speculate. That's not the core. I don't think that's the core reason why he would move his share to his name rather than Ryan, RC Venture. Yeah. It could be just as simple as that, you guys. Nothing much. Okay, so what else? Let's switch gear a little bit here too, while I can still have you guys' attention. I know a lot of people wants to build wealth, right? And I've been listening to this guy quite some time. He is pretty vocal on how wealth transfer has been happening for the last decades, and that younger people, his kids, won't be able to enjoy the same financial freedom unless you really think about wealth building in your younger year to escape, right? To escape the metric, to escape, the 9-to-5 type thing. And it becomes less and less easy. It's not easy to do. But if you're lucky enough to know this, in your 20s, you would be well off. Okay. But it's not easy. And so he's giving you the formula to build wealth over here. And so let's listen in. I mean, I disagree in a couple of things. One point, actually. But most of it I agree with. So let's just start here.
Down to this formula: focus plus the product of stoicism, time, and diversification. Let's break these down, starting with focus. People mistake a lack of focus for a lack of talent. Talent and intelligence are correlated with wealth, but aren't as powerful a signal of your future success as determination and focus. Focusing on finding something you're great at, something you can do better than most other people, something that people will pay you for. It may not be your passion, but getting great at something and the accoutrements accompanying that greatness will make you passionate about whatever it is. And then focus on positioning yourself for success. That means getting certified and getting to a city, especially while you're young, so you can meet and play against the best in your league. Another way to position yourself for success: find industries and themes that are poised for growth. For the past 2 decades, I've ridden the e-commerce wave. I started an e-commerce firm, started another firm advising big firms on their e-commerce strategy, and my biggest stock market holding has been Amazon. So what are the next big waves of opportunity? We had globalization, then we had digitization, and we are on the precipice of the third big wave, dispersion. The dispersion of healthcare, work, education, and fintech are all causing tidal waves of change. Those waves are the ones you want to paddle out to and get in front of. The second thing you should focus on: investing in the right relationships. While this applies to business relationships, the single most important economic decision you will ever make is your partner. Research shows that married individuals experience per person net worth increases of 77% greater than their single counterparts. However, marriage is betting half your future net worth that you'll be partners forever, meaning divorce is costly. And the best way to hold on to a relationship is not to keep score, bring forgiveness, generosity, and engagement. Or put another way, continue to show up. The next part of the equation is...
Oh, wow. Like, I didn't realize there's marriage in here too. All right. So let's go through, okay, one by one, right? So focus, of course, he just, count through focus, right? And I agree with that. There's a lot of I feel like not many people are focused enough to be just one place, right? A lot of people, even people that I know personally, are just focusing on the wrong thing, too much on, oh, Trump is this, and, oh, Biden said this and that, right? And then again, they don't really focus on, I guess, personally better themselves in terms of just one area here, financially, right? And so, and again, that's why I think the media is doing so well at distracting people, elsewhere. A lot of good distraction out there, whether it's, you name it. If you bring it in the context of GME, right? AMC, FFIE or whatever, BBIG, around that time. So they try to, make you less focused on one thing. And I'm not saying, to focus on just GME here. You could apply that to anything, any other security that you feel to invest in. Okay. So this is in generality. Like I said, pick your security and be focused on that. Now he's kind of talked about the generality of making yourself more marketable to society, but I'm just going to draw this to GME in the context of GME here, because of course, this is what I'm focusing on. Stoicism, right? And I guess this is the next point. So let's listen in.
Stoicism. One of the chief tasks of a Stoic is to determine what is under his or her control and what is not under his or her control. Living below your means is the clearest blue flame path to financial freedom, because it isn't your salary that makes you rich, it's your spending habits. Any fool can make money. It's more difficult to hold on to it. As a kid, I thought being rich was having a BMW 2002, topsiders, and Varnays. Hashtag awesome. But as an adult, I know better, or at least I know better now. Dispel the myth that you need to be a billionaire to be rich. You don't need to be a hero. I know partners at investment banks that earn millions every year. However, between their ex-wife, alimony, homes in the Hamptons, and their fabulous lifestyle, they spend every penny of it. They are poor. Then there's my dad. He earns almost $50,000 a year from his Royal Navy pension and Social Security and spends $40,000. He is rich. The most powerful forward-looking indicator of your financial freedom is not how much you earn, but how much you save. Stoics also embody good character. Succeeding in life is a lot easier if people want you to succeed. Many of us have a cartoon image of rich people being Monty Burns. The reality, at least in my experience, is much different. The other Stoic virtue relevant to wealth, temperance, and discipline. In this age of superabundance.
So let's talk about this, and let me kind of relate this to Ryan Cohen leadership, right? And again, this is so important too, because the spending part is what we're trying to get, or at least leadership in GME is trying to get people around the world who's just evaluating the company over there, right? Or at least the analysts out there who just want you to just focusing on the shiny things. The most rich, the richest company in the world, without saying like, hey, the richest company in the world are heavily in debt. How is that not something to be focusing on? And that point really, makes me think, or at least I want to kind of give you the idea of what Ryan Cohen is trying to do for this company. In your personally, you don't want to be flashy, okay? What makes sense right now for this company is to spend less than you make, right? That's how you get rich. And this company is richer than any other companies out there. Why do you think I'm focusing on this one right now? And not only that, they have more than enough money to succeed in the downturn. And again, people are still not looking at it because they are flashy. They think they have the idea of what is rich mean, and then they imply that to, rich mean Lamborghini, rich mean 3 billion, 3,000 stores out there that doesn't make any money. That's not rich, you guys. That's show off. That's just to show you, to mislead you, to think that these companies are richer than ever. Okay? So most of the company that you think is the richest company is broke. Okay? I'm telling you. Because they spend more than they make. Okay? So if you could find a company that spend less than they make, then you are in a good spot here. It doesn't really matter what the SPY is doing tomorrow or Monday, really. And so, that point is really important to kind of point out there. And you have a good leadership here that really, is a stoic. Okay, so there you go. I'm gonna continue to use that term. So I agree with that one. So the first one is focus. Second one is to be a stoic. Meaning that to control what you can, and to be sensible enough to know how much you make, and then how much you are able to spend, and then save for the future, right? That's what Ryan Cohen has been doing for this company.
The reality, at least in my experience, is much different. The other Stoic virtue relevant to wealth, temperance, and discipline. In this age of superabundance, your instincts can lead you astray. Don't let them. The temptations for consumption are everywhere, as industrial production and processing power have created a ubiquitous doom scroll. An upgrade from economy to premium economy to business class to first class to a private jet can all seem like an investment in yourself. They are not. Nor is watching TikTok videos for hours, constantly checking Twitter, Instagram, or Facebook for affirmation, or looking at the price of Bitcoin 7 times a day on Coinbase. We crave dopa for instinctual reasons, but now it's everywhere and we have trouble modulating. Modulate, show discipline. There's a thick line between investment and consumption. One enhances your economic security and the other gives you a dopamine rush. If you're investing to learn or for dopamine because it's fun, that's fine. There's nothing wrong with it, but recognize both of those cost money. I love to gamble. No joke. When I'm in Vegas, I put on a kilt and a blazer and I head down with $1,000 that I expect to lose. The Golden Nugget, $7.99 all-you-can-eat buffet, and Carrot Top, a deeply, deeply misunderstood artist. Obvious for $1,000. Who is awesome in Vegas? Who is the dog? Another thing. Anyone that tells you to be prepared to lose it all isn't talking about investing. They're talking about gambling. If you're serious about investing, you should not be prepared nor willing to lose it all. If you invested in low-cost index funds a decade ago, you would have outperformed 90% of alternative investment funds. And if you hold a basket of diversified stocks for at least 20 years, nobody has ever lost money. The third element of our equation.
So this is the important part. Okay. So you talk about diversification. I agree with that, sure. If you have the wealth already. Let's say you have $100,000 and you want to diversify, that 100,000 will stay relatively the same. But who has $100,000 already to invest? No, I don't even have that. Oh, I mean, I've been accumulating. I'm closer to that than I realized. You know, I mean, depends on where GME is. So if GME is going a little bit higher, I mean, at 80s, you know, I reached that already, but $80 a share when we were spiking. But again, because I you know, invest most of my account in that, majority of my holding is in GME. But that's to say that you know, diversification is good for people who already have the wealth. That's my opinion, right? Not to say that you can't get rich. Yes, just like he was saying, you could, you know, do a return of 13% a year over year on a 30 years basis. You know, depends on how much you put into. What if you don't have the income to do that? And so you need to do a little bit more work for people like me who doesn't have the income to just keep adding thousands of dollars every week, you know, and to get to that point where, you know, just put the S&P 500 and then you'll be set for life in 30 years, right? I want to at least achieve a little bit less time than that. And so that's required a little bit more research on what you actually putting your money towards. You know, really, you have to understand yourself, your income, your risk basis, your time horizon, and all of that to really kind of plan your retirement. Like, do you want to do this 30 years or you want to do this within 2010 or whatever, right? And again, depends on your age group too. You know, the younger you are, the better, because then you have time on your side. And for people who are older, of course, you know, you feel a sense to be like, hey, you know, I have to do this within 20 years. Otherwise, I won't be able to retire, you know, at the age of 70. Something like that, right? But, you know, most people realizing it a little bit later in life, that, you know, because, you know, when they were younger, either they don't have the knowledge to, or they just didn't pay attention enough to the economy. And then what happened? They just, you know, felt, oh, it's too late for me already. When you're in 30s, 40s, 50s, right? And you hear that a lot. And so for those folks, obviously, you know, you have a sense of like urgency there. And in my opinion, you know, the more you know about the market, the better. But then that's required times and energy as well. That's why, you know, I'm only just investing in something that I know to, you know, deliver the maximum amount of less time and more, you know, I guess growth in that sense. Not to say GME is the only thing that will give me that. I'm sure there are other companies out there, but again, I don't know any company that have the potential right now, in my opinion. Of course, again, I'm limited in what I know in the stock market. And so, you know, Palantir, of course, you know, I miss out on that. I miss out on SoFi. That's fine, you know. There will be opportunity like that, and I'm not going to miss out on GME for sure. I know that. But again, time is of an essence. Patience is of an essence. You know, your temperament will carry you through the hard times, the ups and downs of the price. And just like he was saying, you know, don't be checking price action all the time. just to, if you do it for fun, great. But don't feel bogged down by the price action too much, because that's not going to serve you, because that's going to lead you to decide on the short term, right? Rather, you just, learn about the balance sheets, know what you're investing in. And so know the day to day, right? It's like the long-term vision of the leadership. What are they trying to achieve? And what have they proved to you already to be true? And so what better way to just look at the leadership in terms of the balance sheets here? What have they been achieved already for the past 3 years? And what are they saying to you right now? And I think Carter just did a video about Ryan Cohen's speech. I don't know where they come from, but he said it. We're trying to do something that hasn't been done before, and we want to be a company that will prove to people on the balance sheets rather than just telling you what to do. We're not going to telegraph our plan. We're just going to put our nose down and work as hard as we can to achieve the number that we think we can. So leadership like that, I respect so much, because again, they are actually doing the work to get there, right? They're not, just over promising and then under deliver. I would much rather leadership to under promise and then over deliver over time. So that's create value to your balance sheets. As a shareholder, that you want that in leadership. Yes, it's not going to be fun for you, because again, your price action is not going to be immediate until, the next earnings report drops. And so every 3 months, obviously, you're going to have to come back and look into the company well-being. And so we're coming up in March right now. Of course, the price action is going to do what it does best to scare people, to hype people up as much as they can. Again, this is the game of market makers here, to try to find the price that they're willing to buy in, in a massive amount, and to bring as many people out or in as much as possible in the short time period, right? And but over time, that trend line is going to right here. This trend line is going to go the other way. I mean, imagine if they post a beat on top line revenue just one time, right? And that's all it took, because people are overly bearish on this company for no apparent reason, because of the price action, right? For whatever reason, again, and to me, I think market maker really doesn't care where the GME goes. I think they're just trying to make market here. So, sometimes it's manipulative, but that's neither here nor there. Okay, let's go back to this.
Time. In the long term, time is your ally. In the short term, it's your enemy. The amount of time we have is completely out of our control. Do not squander it. Time is the one thing you should not be generous with. Invest early and make it a habit. The math on compound interest doesn't lie. Starting early with a little can beat starting a little later with a lot. Let's take 2 people, both invest $4,000 a year. Person A starts at 20 but stops investing at 40. Person B starts at 40 but ends at 65. Earning 10% a year, person A ends up with over 600% more than person B, thanks to decades of additional compounding. Remember, it's time in the market, not timing the market, that counts. See above, compound interest. Lastly, diversify. In investing, diversification is your Kevlar and ensures that no one bad decision is a fatal blow. Bulletproof vests don't stop you from getting shot or stop the pain. They just stop the bullets from killing you. True story, I bought Netflix stock at $12 a share. That's the good news. It's currently at over $550 a share. That makes me a genius, right? Wrong. Why? I sold it at $10 a share 6
This is the mistake that I did on Tesla too. Same exact thing. Same exact.
months after I purchased it to capture the tax loss at the end of the year and never bought back in. It was a mistake. It hit the Kevlar, but it wasn't fatal. I was diversified, and that diversification continued to pull me forward. One of my first startups was called Red Envelope. When it failed, I went from shopping for private jets one morning to losing 70% of my wealth in what felt about 2 weeks. Maybe it was 3, but it happened fast. Also, what really cost me, I didn't invest enough in my marriage, and it cost me 60% of my net worth. However, I learned, and shit got real for me when 13 years ago, my first son had the poor judgment to come rotating out of my girlfriend. I embraced this equation, invested between 10 and 30% of everything I've made since, didn't invest in anything I didn't want to hold for at least a decade, and I never put more than 10% of my net worth in any one thing. Today, that number is 5%. That doesn't mean I don't participate in unexpected opportunities that offer asymmetric upside. I do. I just don't bet the ranch on them. You can still take bullets. You don't need to be a hero. Just make sure they never kill you. To summarize, focus plus the product of stoicism, time, and diversification. Financial and emotional security come down to discipline, generosity, and investing every damn day. So, to answer the questions we all ask ourselves, how do we build a life of love? How do we develop economic security? How do we get rich? The answer? Slowly.
Yes.
We'll see you next week.
Slowly. I agree with that for sure. Most of what he's saying is true. Like, anyone should take that advantage, especially if you're men out there, young, okay, impressionable. You want to get rich now. Do it slowly. You'll be growing into somebody that people respect. Okay. You don't have to do it like too slow, but that's fine. You're gonna feel like you're gonna waste your life away or whatever. But yeah, I really think Ryan Cohen understands this pretty well. I feel, especially for this company, slow and steady will win the race for forever. Forever. It's like, again, like anything could fail, you guys. Like, I'm not saying this company will always go up until the end of time, but I think we're just too early to even know how high this company will go. And, you have a leadership that is long-term minded, in here for the long term, not trying to hype up anything that they're doing right now, but also is here to work for shareholder. I don't understand why people don't kind of see the quality of leadership here. But again, because of time, right? They want the company to do well in terms of price action in the next 2 days, 2 weeks, 2 months. And that's where, people get so disappointed when the price doesn't do what they expect it to do. Of course, I was expecting, $40 by this time, but I didn't get it. It's okay, just like he was saying about gambling, right? I have my call option. That's my gambling. that keeps me a little bit interested in terms of like, covering it every day. But I always make a point to at least bring people down to earth a little bit here to think about the long-term aspect of things. Because the long terms, like I said in the beginning of this stream, it's going to carry you a long way. And it's going to benefit you much more, 10x, 15x, 13x in 7 years, is still a good investment, you guys. It's like, I don't know, like people, again, coming from crypto myself, I understand that, if you buy certain meme coins out there, they could deliver 1,000% in 2 days. But those is, unless you get it in early on, insider or whatever, and then sell just at the right time, you won't get that ability, right? And so, or you won't get that lucky. So you can't always deliver that. Let's see, what else did he say? I wanted to stop there, but I forgot. Sorry, you guys. Like I said, it's going to be a long stream today. Okay? I have some time to kill here. Let me see. It was a globalization part. I think this part right here.
Investment and consumption. One enhances your economic security, and the other gives you a dopamine rush. If you're investing to learn or for dopamine because it's fun, that's fine. There's nothing wrong with it. But recognize both of those cost money. I love...
Sorry, you guys. I'm trying to look for this one right here. There we go. So this graph right here kind of show you, the phase of growth in different sector, right? And over here, it was digitalization, and I think we're still on that precipice here, that growth. It's still not to its max, but the one industry that I think is going to do well is crypto industry right now. In the near the next 10 years, or even 4 or 5, because of this precedent right here. I know it's looming with fraud. I get it, but you need to clean up the regulation out there, that good actors in crypto space will be able to clean up the space by means of free market, right? If you are going out there to scam people out of their money, okay, people are going to realize it, and then they're not going to trust you anymore. But the people that are actually trying to build something on top of the blockchain, like GME is about to do, is going to be the trusted brand for anyone to go into the space. And so the technology is there for, companies and whatever, whoever wants to build on the blockchain, ledger or whatever, XRP ledger could do that without any repercussion on, people getting sued. And the last administration hasn't been clear on what crypto is. So this administration is going to kind of clear that up. And that's why I put NFT is coming back, because it seems like if you look at, right here, Gamestop NFT, they still have it on right there. So look at that, right? So it's still up, and if you scroll down, it says right here. I don't know if you see, but anyway, so if you go to the website right there, it seems like they have been updating to 2025. So, the speculation is that they might bring it back when the clarity hits the market again. And so people could speculate on these type of asset again, right? Play for free. There's games out there that are developed based on blockchain base. I know it's a heated topic among the gaming community. They might not like this because it's on the ledger and they can't recover their funds if you send their funds. I don't know. Again, that's blockchain stuff. But my point is there are ways for GME to grow in this sector as well, because they've been on it already. And so perhaps, the next level of expertise would be to make blockchain is so accessible to the rest of the world that it's easy for them to use the platform right there. And that's the next pain point that we have to solve as a company. And it's not going to be, within a year, but hopefully because of the money that they have right now, they could hire the right talent to make that happen, right? And so, and we have that ability right now because we have no cash burn. And on top of that, we have the interest from the cash that we have able to accumulate it so far, which is around $200 million so far, right? From the time that we have the cash and the time that we are about to spend it. So with that $200 million that we are able to spend risk-free, how much are we able to be able to generate from that? So I'm sure the world is waiting for that, for leadership to deliver on that. And with Roaring Kitty last tweet, he's been waiting as well. It's as simple as that. Like, you don't have to come up with the anything other than that. Just keep it simple and stay, I guess, patient to see what leadership is going to do next, right? And yeah, I think the investment is pouring into crypto as we speak. You hear a lot about what is it? Many companies out there are signing up for Ripple, and they are. Oh, actually, CoinGecko. I wanted to kind of monitor this too. I keep forgetting. So this is the stablecoin for Ripple. And this space has been, monitored quite a bit. So crypto's total market cap went down. Of course, people are waiting on the dominance for Bitcoin to go down, for alt season to kick in. Let's see. I wanted to see XRP here real quick. I know there's been a lot of push, and just to be careful too, because when the media is telling you to buy something, this might be the time to start to trim out some of your position, right? Okay, sell the news type thing. Okay, so currently it's under 3 again. But this is the one that I'm trying to track here too. So I'll put it in the spreadsheet, and then we'll come back to it later. But the whole idea is that it's deflationary. That every time the chain is being used, tokens will be burned. So it's a different dynamic, right? Because the whole criticism about XRP is that it's banker's coin, and it's not useful for anything and all that stuff, and that it's not as valuable as Bitcoin. But I think it's different in a sense that it can be useful, and the bank has already been kind of testing on that. Useful on what? It's real-time payments, right? A real-time settlement as well, because the old system is just too old to kind of. I guess the way that the whole world banks are transferring money to one another is a bit outdated. And so, yeah, it's remained to be seen. I'm putting my investment in this, so just to kind of capture some of that, I guess, realization from the rest of the world, the battle between, Bitcoiners and XRP, right? Bitcoin has enjoyed so much growth already that I think at some point XRP is going to enjoy that growth cyclically, right? Not to say that Bitcoin is less valuable, anything is more valuable, but I think it's just the time being. It's the opportune time for some sector to be growing, other than the incumbent already. And again, people have the recency bias, right? Because when they see Bitcoin going to $100,000, they think it's going to go higher within the next 2 months, right? Without thinking of the long terms. Like, yes, it's going to go higher, but it's going to take a little bit longer than you think. Like I said, people, the saying is, people usually overestimate what a certain things is done, like whether it's a security or whatever, or your own ability in 2 years, but then underestimate what they could do in 10 years. And so, and again, because the time, right? 10 years seems like so long. I'm telling you, it's not. 10 years is a blink of an eye if you enjoy what you're doing. And so, I mean, how many years have I been investing in GME right now? Close to 4, right? No, close to 3 actually. So time goes by really fast. And before you know it, I'm going to be owning GME for 10. And it's coming, right? So 2 more years, it's going to be 5, right? And then 5 more years, going to be 10. So yeah, I'm excited, you guys. I'm excited. Let's see. How are we doing today? I think I'm running out of steam, you guys. Let me see. It's 11 o'clock. I started at 8. So 8:30 maybe? Okay, let's switch gear real quick here. Let's see what X is saying over here. Not much. All right. Okay, so it's a low volume for sure. And low volume, low IV, you know what happens. Sometimes it's explosions happening, right? Of course, people are drawing the correlation of what happened in May. Or even, okay. Yeah, what happened in May, when we were trading around $10 or so. You see, the algorithm trying to, shake people off. And so the variety, perhaps this whole thing is right here. Okay, so there might be a drop some more, then go up. Yeah. I think, let's see how many more it makes. Okay, let's go to the real graph over here. Okay, so this is 0 lag. Let's just turn that off. I think this is the one that they're trying to compare to. But I really think it's going to be a couple more weeks, you guys. If that transfer is going to ensue some of the deliverings of shares, right? You're going to see this type of fractal. I know. Please do not trade based on this at all. I'm just doing this for fun, you guys, okay? It's pretty canning how it's being used to shake retail out, because they're about to send it higher. Now, it fits pretty nicely. And I think there's another, let me see. let's just do it right here. The lowest is going to be Tuesday. 2 more weeks. 2 more weeks. If this is the fractal that they are using. So less than 2 weeks, you'll see that. Again, please do not trade on this. Or a little bit more down. I don't know if I like that at all. Let me see. I think the drop's gonna be a little bit more shallow, okay, from this one right here. One more dip to maybe a little bit steeper to close to 25. Okay. Now this could invalidate the fractal as well. So I kind of create this support line right here. And if you look back, to the previous price, see, like it used to be resistant here. You could say this is a support right there, big one, right? And so, I mean, if Manuel was right, it could come down here, but I just don't see how that is possible. I mean, people would buy it like crazy out here. So, just have to look into it too. That's crazy, huh? But yeah, it's been a long wait. People becoming more impatient by the day. So they will try to shake so many people out here. Maybe the steeper this is. Okay, so that's the steep. This is the low volume. Hold on, let me see. Sorry, you guys, I am just playing right now. See, that's the period of where, you see very dry, 3 million there, 4 million shares, 5 million shares, 3 million, 3 million, 3 million, right? Weeks of just dry. And this is usually the opportunity. I'm waiting on that. So 2 more weeks of, just oscillating in around $24 or $25 here. And then I'm sure Roy and Kitty is waiting for that too, to pounce, right? And so, yeah, I mean, the cat's gonna save the world over here. No, I'm just kidding. I don't know. Again, his tweet hasn't been doing much for most people, but for most people, standard, right? They're expecting 10x every time he tweets. And so when that doesn't happen, people grow a little bit more frustrated because, they think that Rowan Kitty tweet's gonna do something when it's all set up already, If they want to send the price higher, they're gonna send the price higher at will, because then they have money to cover, then they have liquidity to try to grab. And so it's all about liquidity, you guys. Like, so if you understand that, then you're less likely to get sucked in to one of those liquidity grabs type thing. So But again, this is why Warren Buffett was saying too about how the stock market is to take money from the impatient to give to the patient, like the most patient people. And so if you're here for the long run, you stand to benefit so much more. And whoever trading in and out of GME is going to end up paying forward to the people that are holding for the long term. Because the short, the day traders out there are the people that are price discovering every security out there. They are the one who, losing money to the people that hold the stock for a long term. Let's see. Of course. And then people just thinking about this. Okay. All right, become a billionaire. Buy and hold. AMC. I don't think so, you guys. Okay, so 4-year anniversary. Of course, this is kind of a couple days ago. Yep. Lots of crypto here. Exchange. Okay, off exchange, 73%. Is it on? Oh, this is like AMC people. Okay, Roy Kitty. Okay. Crazy. I don't know why they're, promoting GME coins over here on Solana, on the blockchain here. They need to do something about it, honestly, but I think they just need to hear about the new regulation on crypto and see what they could do. In terms of can they sue this, people over here that are creating, GME likeliness and profit off of it? It's crazy. Okay, the cat. Aww, he's so cute. All right, guys, I think I have no other questions here. Burning question. I guess I'll just have to let you go. I will see you when I see you. I hope you learned something. I hope you feel entertained. I hope, you have a good weekend. I don't know if I'm going to be here tomorrow. We'll see. Depends on, what I feel needs to be addressed. But, in summary, if you want to learn a little bit more about being stoic and all that stuff, I think he has good advice for younger people out there that, wanting to at least build the wealth slowly and more methodically, more intentional in ways that you want to carry your life moving forward, rather than bash on each other for holding a certain security that you don't own. And so, learn to think for yourself too, right? And I know, I agree with most of what he is saying, but I think diversification is for people who already have the wealth. And if you want to earn something to that, to the level that he's at right now, you have to at least, make your own company, I guess. You have to invest in yourself type thing. So, not many people could achieve that. So that doesn't mean that you cannot, create wealth, but you just have to do it much slower than most, right? So, all right, guys, I will let you go. I will see you when I see you. Thank you.